For millions of people, rent isn't just expensive anymore. It's quietly blocking their ability to ever build wealth. Not in an obvious way. Not dramatically, but slowly enough that most people don't realize what's happening until years have passed. Most people think rent is just a monthly expense. Something you pay, something you accept, something you assume will stabilize eventually. But heading into 2026, rent has become something else entirely. It's become one of the most effective wealth killers in modern life. Welcome to Value Tricks, a channel about money, psychology, and realistic financial thinking. If you value calm, honest conversations about how money actually works today, you can like the video or subscribe. Now let's talk about rent and why it feels heavier than it used to. Picture a young professional in their late 20s, living in London, Berlin, New York, Toronto, or any growing city. They earn a decent salary. Not low, not extreme. Let's say around $70,000 a year, or the local equivalent. After tax, roughly $4,200 a month lands in their account. They're not struggling day to day. Bills get paid. Life looks fine from the outside, but every year feels tighter than the last. 5 or 6 years ago, a one-bedroom apartment might have cost $1,200. Today, that same apartment is closer to $1,800. That's an extra $600 every month. Not because the apartment improved, not because life upgraded, just because the market moved. Add utilities, internet, phone, about $300, transportation, $300 to $500, food, $400 to $600. Before saving or investing anything, well over half of the income is already gone. This is where most financial advice quietly stops working. Because advice usually sounds like this: save more, invest early, build assets. But it rarely asks a harder question. What happens when rent absorbs every future raise before you ever feel it? Let's do very simple math. A $600 rent increase is $7,200 per year. To offset that after tax, you don't need a $7,200 raise. You need closer to $10,000 or $12,000 in gross salary. Most people don't get raises like that, year after year. So every raise feels invisible. Every promotion feels smaller than expected. On screen, imagine a simple chart. Rent rising steadily. Income barely moving. That gap is where progress disappears. This is how people earning good money end up with nothing to show for a decade of work. Not because they were reckless, not because they didn't care, but because rent quietly consumed the future before it could arrive. Psychologically, this does something subtle. People don't feel irresponsible. They feel frustrated. They earn more than before, but nothing changes. So adaptación. They delay investing. They pause saving. They lean on credit cards for short-term breathing room, and rent becomes the fixed cost. Everything else bends around. Rent is different from other expenses. A car loan eventually ends. Student loans slowly shrink. Subscriptions can be canceled. For most renters in growing cities, rent has only moved one direction 4 years up, and every increase doesn't just cost money. It costs time to invest early, time to take career risks, time to move for opportunity. High rent doesn't just keep people from getting ahead. It keeps them cautious. Over 10 years, the impact compounds quietly. That extra $600 a month becomes $72,000. Not spent on anything memorable, not invested, not preserved. Justo absorbed, and the real loss isn't the number. It's the lost flexibility that money could have created. This isn't about blaming renters, and it's not about pretending everyone should buy a home. It's about recognizing that rent has shifted roles. It's no longer just a housing cost. It's a wealth prevention system, and most people are operating inside it without realizing the long-term trade-off. Financially intelligent people don't magically escape high-rent markets. They think about rent differently. They see it as a strategic constraint, not a lifestyle upgrade. They measure rent not by comfort, but by how much future freedom it removes. They understand that the real danger isn't high rent alone. It's high rent combined with slow wage growth. That gap is where wealth quietly disappears. Going into 2026, this matters more than ever, because when rent rises faster than income, discipline isn't enough. Awareness becomes the advantage. A useful question is simple. If your rent rose another 20%, what would you be forced to give up first? That answer tells you more about your financial position than any spreadsheet ever will. If this perspective helped you see why rent feels heavier than it used to, you can support Value Tricks by liking the video or subscribing. No urgency, no promises. Just clearer thinking before time quietly does the damage for you.